Hey traders, Raghee here, and in this free recap video I'm going to talk about what some of the implications about the US dollar and the bond market have on other markets that I have my eye on. So I guess really the touchstone for everything I do is, can I look at currency, can I look at commodities and understand the markets in general? Can I understand economic cycles? Can I understand sort of how the dominoes fall, and in that where there are more opportunities. So let's talk about two markets that I watch really closely. Not in any particular order. We'll start with the 30-year. Now, we've been talking about peak yield, this concept of peak yield, and all that means is that we've seen the highest rates for bonds. I mean, it's in our rearview mirror. That is it. We've seen the highest rate, and from here on out, the rates will continue to go down, and that's actually a movement higher on the chart. Now that might seem kind of unusual when you think about the fact that there's probably at least one, if not two, more hikes left in the FOMC. We're going to see the hike in December. It's probably less than 50-50 right now that we'll see a hike in March. In fact, I don't have to guess at the expectation. We could look at Fed Fund futures to sort that out. It's about 60% likelihood that we could see rates stay where they are. Okay, so why is the yield heading lower? And this has everything to do with the economic cycle that we're in. I call this the D stage of the economy. There's an A, B, C, D. This is the D stage. And yes, it is for the downturn. It is for bad data, right? The data is going to get weak, right? So if I look at the D, D is for data, which is going to get increasingly worse. Downturn in the equities markets, downturn in emerging markets, downturn in many of the emerging market currencies, etc. So D across the board. In that environment, we typically see bond yields head lower, and we also see dollar head higher. So both these charts, the 30-year and the dollar index, are going to move higher. So what are the other dominoes that are going to fall in the wake of that? So again, stronger dollar, again, the chart, stronger dollar and higher prices on the bond charts. Again, that's very much part of this D stage. How do I play the strong dollar? We short the euro. Okay, we look at the euro FX futures contract, or we look at the euro US Forex, and we look for opportunities to short into rallies. We look for opportunities to be long dollar, and in many ways, euro US is going to be your best, highest correlated currency pair to actually buy US dollars. It's actually a better way to go than playing the DX futures contract. I'll rather play the euro FX futures on the CME. Or even better, get a little bit more leverage, and you can play euro US to the short side. Now, I'm also, as I mentioned, bullish, okay, again, directionally bullish, the bond chart, bullish dollar. Now, what do bonds moving higher give us opportunities for? And this might seem a little odd, but keep an eye on this. When bond yield start to move higher, it's because the bond market's anticipating moving forward a quarter or two and thinking, all right, we're probably going to have an FOMC hit the pause button on this tightening cycle, and we're going to start to see more neutral, which we have, and possibly dovish, which we probably will, talk. That means as longer term rates go down, and it may not look like it now, but there's going to be an opportunity in the XHB for home builders and the ITB. Now, it's a little early, but you know what? I like to put narratives on the table well ahead of time so I can start to see the way they're moving, you know, with these dominoes that are falling that I'm talking about. So again, what I want to mention here in this video is the actionable idea now is look for opportunities to get long the 30-year, get long the 10-year, get long ETFs like the TLT. What else do you want to do? Get long the dollar. How do you get long the dollar? You buy it against currencies like the euro, against possibly currencies like the pound. We've had a long US dollar versus Canadian dollar position for some time. So whether you buy dollar Canada or short Canadian dollar futures, that's another long dollar position. So again, write that down, please. Look for opportunities to get long the long bond. Look for opportunities to get long the US dollar. That's the kind of those are the kind of pockets of opportunity that we are going to have in this D cycle, this D stage of the market. In the premium video, I'll talk a little bit more about these 4 stages, but these are 2 very strong ideas for the market environment that we are in right now. See you in the next update.